Hello and welcome to Leaders of Tomorrow, India's only daily television platform for small businesses. We bring you the right information to empower you, the SME entrepreneur. I'm Sunanda Jayaseelan. Tonight, we're bringing you part 2 of an exclusive chat with the Small Industries Development Bank of India, or SIDBI. I caught up with the Chairman and Managing Director of SIDBI, Mohammad Mustafa, and asked him about the multiple schemes that have been announced by the central government of late for small businesses, including the CGT-MSE or collateral-free loans that are being offered up to 2 crores, asking him about the effectiveness there, some of the concerns that entrepreneurs who've been speaking with us have been saying in terms of the challenges they face when accessing those loans. I also put him on the spot, asking him about the announcement by the central government of the sanction of 1 crore loans under 59 minutes. Experts speaking with us say that this could perhaps lead to worsening of the NPA situation. I asked him his views on that. Here's what he had to say. Let's talk about the CGT-MSE scheme. First and foremost, maybe I can get your thoughts in terms of, what this scheme has meant for small businesses.
See, this is very, very important. If you look at, it's a very big guarantee program, and it was started long back in 2004. That time, there was no guarantee cover, a guarantee scheme available in India for that matter. And it was basically meant for MSE, micro and small. It is not for medium enterprises. And it continues to be like that. So right now, I think over the years they have been changing. After, I think 2 years ago, the limit has been extended to cover loans up to 2 crore. And now NBFCs have also been allowed. So we're looking at that, and we have tried to analyze why, because when I look at the data in CGT-MSE, earlier data, it is as if the smaller loans were covered actually. Big loans were not coming. So we looked at what is the problem. Then we discovered 2-3 things that we have corrected. One is that earlier the fee was linked to your original sanction amount. So suppose you got a 1 crore loan, even 5 years down the line, fee will be charged on 1 crore. So we changed that. We said no, fee will be charged on the amount that is due at that point of time. Second, we've seen a tendency in bankers that they want to give more money, more than 1 crore, only when there is some collateral. Now what happens, once the collateral is available, they become ineligible for CGT-MSE. So we changed that also, because we realize this is a big market, and if we intervene here, it can make a lot of difference and people can lend more. So from that point of view, we allowed partial collateral system, under which if suppose you've given a 2 crore loan and you've got 20 lakh or 50 lakh collateral, so you can use that collateral, and for rest you can take our guarantee, so that you have advantage with regard to capital or other guarantees that will be available to you. That is one. Thirdly, we allowed the retail credit, retail trader was not provided guarantee, because of which banks were a little hesitant to do that. So we have covered that, and we are doing that. So
sure.
3-4 things we have done, which I believe is making it work. NBFCs were not there. So first year when we see NBFCs also availing a guarantee under various schemes. So as I see, I think this is going to be one of the best year in the history of CGT-MSE in terms of the number of enterprises covered, the amount of value covered, and even otherwise in terms of profitability for CGT-MSE.
Okay, would you be able to share a projection on that with us? I think,
if you see, last year we had done guarantee for 19,000 crore. And this year we are looking at a figure of, say, 30,000 crore.
Okay. The Leaders of Tomorrow has been on air for 7 years now, and we've spoken with thousands of entrepreneurs in many of the cities that you're going to. Most people tell us that banks are shy of lending to them collateral-free up to 2 crores. They will only perhaps provide it up to 1 crore. How would you like to address that?
I think, see, though loans are available without collateral up to 2 crore, because it's a scheme which has been made. But I don't tend to agree or disagree with this, because I don't have any data to focus. Okay. But yes, I have, as I mentioned you a while ago, that banks are generally comfortable, at least when they go beyond 50 lakh or 1 crore figure, to have some collateral.
Okay.
So to address that, we have made it. So what will happen, even if you go for a 2 crore loan, you've given, say, 50 lakh rupees of collateral. For 1.5 crore, because of this, they will charge you high credit. High interest rate.
Sure.
But now with the guarantee coming, I think that problem we have tried to resolve it. So I think the credit will be available and at a better rate.
Okay. Another scheme which has gained a lot of attention, of course, was announced not too long ago by the Prime Minister himself, that loans up to 1 crore in 59 minutes. Let's start with the thinking really behind that before we discuss that scheme.
So as I told you, the idea basically is to get you a loan quickly, because as I told you about the intervention in Farm Udyam Mitra, it was loan origination, and the people will not know what happened to my application. Obviously, banker will look at and get back if it is bankable. But in this, the idea was to make people get instant reply whether they are eligible for a loan or not. How it works is that it's first thing I think is very important to know that it's only for GST registered trade people, because that is how it works, because it is mathematical formula which is used. So you have to file your GST return. From that we'll know how much of sales you have got, how much profit you generate, how much money you have, who are your suppliers, what it is. So we'll have basic idea. Then it is cross-checked with your income tax return. Then we see how much of surplus tax you are paying, how much of income you are generating. Then we check it with your bank accounts, which this all information is provided by the borrower himself.
Okay.
He has to provide. Once he provides, then based on that we create a balance sheet actually, which is created by the system, and based on which we decide how much loan can be given to him. Meanwhile, also credit check, bureau check, MCA check also happens during the time. So we decide how much surplus he has got, because ultimately to give a loan I have to know that how much paying capacity he has. So based on that we know how much he can further take from the system.
Sure.
So accordingly, and then once he is eligible for a particular amount, then that is mapped with the specific credit and loan policy of different banks, and based on matching, he is given offer of how many banks, whoever the banks are eligible, are mapping their policy for him, and that is sorted on the basis of best interest rate.
Okay.
So generally the borrower goes with the lowest interest rate is available. Once he selects the bank, then that CAM report, credit assessment module report, goes to the branch that he has chosen. From here he will take the loan. Then the bank gets in touch with him, and it happens. It happens say in 10 to 15 days. Yes.
Okay. So why 59 minutes? I'm curious. Why 59 minutes?
So 59 minutes basically because we wanted to do a quick assessment for a person to know whether I am eligible for loan or not. And you see, 59 minutes sufficient to give in principle sanction and eligibility.
All facilitated, of course, by the use of technology.
Yeah, absolutely, completely taken. There is no human intervention.
Okay.
It can't be done, in fact, that way.
Absolutely. And you're saying that the approval happens in under an hour, but the sanction could take about 2
Yeah, sanction, because once the credit module goes to that branch, then they will look at that. They will see ultimately what has happened here. All the data is provided by the borrower. So ultimately bank checks the genuineness of those documents, and then they go ahead.
Okay. What's been the sentiment or the mood of the banks themselves?
They are very happy. If you see, you can talk to big banks, Bank of Baroda, SBI. They are all very happy. You must have seen a news report today that more than 30,000 crore has been sanctioned to more than 24,000 borrowers. Yes.
Okay. Would you say it's fair then that experts feel that perhaps if banks are being asked to lend within set guidelines, framework, etc., and more than anything else within a timeline, it could perhaps lead to the kind of crisis situation we've seen when it comes to infrastructure? Now, for instance, what has happened with lending to the infrastructure sector was because it was being prioritized to some extent. No. Do you think that's fair?
I don't know. It's not fair. Sure. But simple reason, see, ultimately, how can I force anybody to come and avail a loan? Ultimately, the person who wants a loan, but if you look at usually the people who have been taking loans, even otherwise without a portal, number will be a little higher than this, okay. Right? So these are the people who actually need loans. It's not, see, nobody will take a loan for loan sake, because ultimately he has to return. So the premise is absolutely incorrect, because the person who wants a loan goes, and banks are giving loan only if he is eligible. If he is not eligible, he will not get a loan. Because in any case, if you are eligible borrower, you go to a bank that I want a loan, and if you are eligible, they will give you. No? It is like same. There is no force are something that you have to do that.
Okay, this is more from the fact that banks are expected to have a certain exposure to the SME space, similar to the infrastructure space.
See, that's why I'm saying that all is mapped here. See, even it's a, suppose what happened there, a person is there who has good business, but suddenly you will see he's only getting eligible for say 10 lakhs only. You know why? Because the system is able to see that all the place where he has taken loan from, any institution he has taken will know. So we'll know that suppose he is capable of getting 1.5 crore, but he has already taken 1.4 crore, so he will only get eligible for 10 lakhs. So the system is foolproof.
Time for a break, but we will continue this very exciting conversation with the CMD of SIDBI on the other side. Just stay tuned. Welcome back. You're on Leaders of Tomorrow, and tonight on the show, continuing this two-part exclusive conversation with the Chairman and Managing Director of SIDBI. I want to also talk about the sort of the lending as far as women entrepreneurs are concerned. And in fact, before we talk about lending to women entrepreneurs, just your view as the Chairman and Managing Director at SIDBI to understand, what your view really is as far as women entrepreneurs.
See, we focus, when you focus on entrepreneurship, you have to obviously, within that group, you have to focus on the sections which need to be prioritized. I think women are one of them where we have to focus. So that is one of the priorities that we have very many women-centric programs. But there is a unique program coming up which I would like to tell you. We are working with World Bank to launch women livelihood bonds, under which what will happen that fund managers of India, as part of their philanthropic activity, will give money to SIDBI under this scheme at say 3% only. So they will get 3% interest, but they want to give this money, and then will further ensure that this money is available to the end customer, to women entrepreneurs, less than 13%. So this is a very, and the uniqueness of this scheme, this is not government driven. The uniqueness of this scheme is that it is coming from commercial fund managers who have money and who want to do something good. So they are coming forward.
Okay. Are you encouraged by the number of women entrepreneurs you're seeing?
Yeah, we are very encouraged, and when we run Swavalamban series, we are very happy to see that a lot of innovative businesses are actually being run by women. And in startup space, which is another business area for SIDBI, you can see a lot of activity, a lot of participation.
Okay. Reports that came out about 2 years ago, and in fact even done last year, has said that if you're looking at say venture capital or private equity funding on the part of the entire industry in India, the kind of funds which are going into women-led and started businesses is less than 5% of the entire venture capital, private equity, angel funding which is coming into the ecosystem. So, how do you see that changing?
So that is changing very fast, because I don't have data, so 5% data, where it comes from, I'm not aware. But I can see, we are running a fund operation for Government of India, under which I have recently seen 2-3 funds which are actually women-centric only, who have applied for money and they are getting money. Even otherwise, when I see startups which are availing finance from these venture finance company, I see a lot of women are there.
Okay.
Yeah.
Okay.
A lot of women fund managers are also there,
sure,
who are actually venture financiers, who are giving money to other startups.
Okay. To this interview, Mr. Mustafa, I'd also like for your views as far as entrepreneurs who are in Tier 3 and Tier 4. According to you, what are the specific opportunities and what are the specific challenges that entrepreneurs who are based in these areas have?
See, I think the challenge for them is the accessibility. It might happen because if they are, the problem is in case of if you are running a formal business, you will get the money. But if you are running an informal business, I mean, suppose you are doing some activity where you don't have a plant, where you don't have a machinery, where you don't have premises, they will have difficulty. So that is, I think, the challenge. But that challenge will always be there in the Tier 1, 2 also, and 3 and 4 also. But I think apart from this, accessibility of finance and maybe a good rate can be a challenge for them because of the high touch model that will be required to go to 3-4. And compared to urban area, the presence of financial institution more and more. So the rates will be one challenge, I think, that they will have to.
Okay. How about the opportunities then?
Opportunity is that it's quietly unserved, so there is lesser competition. So they can actually make most of it. While in urban area, they get cheaper money, but there is competition. There is a lot of competition for any business that they do. In tier 3 and 4, that opportunity is wide open.
Okay. Are you happy with the number of entrepreneurs who are based outside of the metros who are applying, who are coming and meeting with SIDBI or applying for loans? Through this interview, what would you like to tell them about, perhaps they're lacking awareness about some of your schemes?
See, I think they may be lacking, but we are now coming up with this scheme which is called SDCRO, under which we are going to appoint officers in 78 locations who are going to cover 350 districts of the country, and these 350 districts have been chosen on the basis of the MSME exposure by all institutions in those areas. So I think that is one intervention that we are making, which is going to make their life easier, because this fellow will be on the foot, they will be doing survey with them, talking to them, will be doing promotion and developmental activities, and he will handhold them and make them run and open an enterprise.
Okay, and how soon is this going to come up?
This will be as early as April.
Okay, all right. Let's talk about technology as well. And you did speak, briefly about how you're using technology. You spoke about the use of data. But apart from data, I want to talk about how technology and the use of technology is helping you perhaps lend to entrepreneurs who are based in these tier 3.
Yeah, as I told you, see, we started one Uday Mitra, which is a loan portal. So that gives you portability from any part of the country. You can come and file an application for loan. You don't have to travel anywhere. Then the bankers will come after. Then the next level I told you is that PSB loans in 59 minutes. So that is another thing. Now you can see actually you are getting your eligibility in 59 minutes. So that is our next level. I think the next level will actually be, I think we are now working on a concept whether we can work a platform where any lender can plug and play and sanction a loan, say less than 5 lakhs. So we are working on a technological platform which will be completely AI based, and based on interview will also be know whether the person who is being interviewed, there will be no physical contact, whether he is lying or he is speaking truth. That technology we are also bringing based on his facial expressions. There are other factors, so we are trying to create another construct which will make available to all the all the lenders, so that they come, plug, and do. If you want to do smaller loans, you can have this capacity. So that will be very high level, which will come. See, another 6 months or so.
Okay. Speaking of technology then, I want to understand from you, are you happy with the kind of innovation you're seeing on the part of fintech companies? Because every day you're seeing more and more fintech companies that are coming in, especially post-demonetization.
Yeah, that is revolutionizing the entire process. You see, one thing that has happened to lending is that it's no more the same thing as it was used to happen earlier. Now it has changed. As you told Uday Mitra, in 59, it's all actually fintech work. You can, based on financial technology that is available. So they are actually revolutionizing, and in terms of reach, in terms of availability, there's a far simpler, nimbler model to do credit, and they are a big challenge to banks. Now you can see the other way, banks have now learned the problem, and now they are collaborating with them, actually, taking them in their fold rather than competing with them.
Okay, we're counting down to the full year budget in a couple of months from now. What sort of expectations do you have from there?
See, we have already seen a lot of things happening for SMEs, even in this vote on account, and I hope some more measures will come based on what will be the situation. Maybe annual data will be out by after the year is over. So I think based on that, government will take some more measures to ease the life of SMEs.
Okay. In the next, say, 2 to 3 years, what sort of outlook do you have for the MSME space?
See, I think importance of SMEs can never be overestimated, because they are in such large numbers in terms of in terms of export, in terms of GDP, that they will always be important and rightly called the growth engines for the country. So I think they will continue to flourish, and with all the help that government is giving them, I think they will be in a better place. Credit growth, again, I'm seeing a good credit growth this year and even the next 2 to 3 years.
Okay.
So I hope and I believe that MSMEs will be in much better place than where they are.
Okay, I very quickly want to talk about the 10,000 crore fund of funds and about the utilization and what perhaps is going to increase the utilization there.
See, I think when people talk about utilization, you have to understand how the fund is structured. The fund is 10,000 crore and this is a 10-year fund. Up till 2015 it is to be given. And right now, up to now, we have already committed 2,200 crore. And we are going to commit another, say, 1,000 crore more by the end of the year. So you will see that 1/3 of money will already be committed by the end of this year. So after that, we'll have another 6. So I think another 2 to 3 years, the entire money will be committed. You know what happens? The commitment is done, then the drawdown happens, and generally after a commitment, a drawdown takes 5 to 6 years.
Okay.
So it's dependent on so many factors. He has to raise funds, then he further has to invest, then he has to raise from other fund managers. So it takes time. But this is a cycle which you'll find everywhere, whether in terms of the global giant, CDC, IFC, everywhere the pain is same. 5 to 6 years, generally 4 to 5 years takes to draw down the money.
Okay. Thank you very much for your time here on the Leaders of Tomorrow.
Thank you.
Thank you. All right, that wraps up this show. If you have any feedback for us, we love hearing from you. The SME viewer, do get in touch with us. Email us. leadersoftomorrowtimesgroup.com is our email ID. Reach us on social media. Sunanda_J is my personal Twitter handle. LOT_ET Now is our official Twitter handle. Reach us also on Facebook, Leaders of Tomorrow on ET Now. We love hearing from you and promise to answer each and every one of your questions. Take care. Have a good night.